is on the numbers coming out from that company. And on the revenue side, more than $6 billion in quarterly revenue has been reported by Tesla. The stock after hours is up above $1,600 per share, so it's higher by 1.5%. That's better than expected. Revenue was supposed to come in at $5.65 billion. Now, the expectations for Tesla, and this is true maybe this quarter more than others, were all over the map. The analyst estimates for anything from a huge loss to a fairly sizable profit. There's a decent amount on the line for this company this quarter, because if it does report what I think you'd describe as an acceptable profit, in other words, acceptable along the lines of the generally accepted accounting principles, the next step, just about everybody thinks for Tesla, is acceptance into the S&P 500. We are looking over those numbers on the profit side. As we do so, Gary Gastel, who joins us, FoxNews.com automotive editor. Jonathan Hoenig is back as well. And that's been the thing, Jonathan, right? I think it's pretty much thought to be a foregone conclusion that Tesla is S&P material finally, right?
Yeah, and Connell, it was already certainly big enough to be included in the S&P 500. What was missing was exactly as you said, that criteria of four consecutive quarters of profits. It is now eligible for the S&P 500. What does that mean? That means that all those S&P 500 index funds now, if it's included, will have to buy Tesla stock. And, you know, it has already doubled just since April. It's up about 270% in 2020. And this is one of those classic growth names of our era, Connell. It's trading at extraordinarily high valuation, something like 9,000 times earnings. This is one of the most exciting growth stocks of our era and one of the most expensive as well, up once again after hours.
Yeah, you can't even have a conversation about whether it's overvalued or not. I mean, it is when it goes down, and I guess it's not when it goes up, people tell you. Gary, let me talk about products with Tesla, and also maybe touch on the business outlook as well. We're talking to Christian Whiten about China. That's a big part, I think, from what analysts have said, of Tesla's business in the second half of this year, as we all rebound from the coronavirus and their business starts to pick up with that factory in Shanghai. I don't know if it's as strong as China goes, Tesla goes, but it should be important to them, right?
Yeah, that's absolutely a big part of it. Look, Tesla weathered the storm last quarter pretty well, but we don't really know where. They don't break down their sales by market. A lot of that could have been in China. We've seen secondary evidence that U.S. sales fell pretty dramatically. And now they are not even telling us what cars they're selling. They're bunching the Model 3 and the Model Y together, so we really don't know where the demand is for either of those products. Fact is, though, they sold 90,000 cars, delivered 90,000 cars last quarter. That's pretty good. But when you look at Toyota, which is now Tesla's worth 50% more than Toyota. Toyota sold over 10 million cars last year. Tesla sold 375,000 or so last year. Toyota sold more RAV4s in the United States than Tesla sold cars around the world. I don't know at what point Tesla gets to 10 million cars, but there is still strength and growth in the years to come.
Let me go back to the financials for a moment, Jonathan. I mentioned revenue $6.04 billion. To be clear, the estimate was $5.36 billion. So that is far better than expected, no matter how you slice it. Stock still up 2.5% after hours. In terms of earnings, a couple of things. Always a little complicated, especially when you have the estimates all over the map. But on an adjusted basis, Tesla is saying it turned a profit of $2.18 per share. Again, adjusted for accounting purposes. When no adjustment, it looks like a loss of 50 cents a share. I don't know how that, works its way into that conversation we were having earlier about the S&P 500.
Yes, no question, Connell. Tesla's accounting has always been controversial, and a lot of more traditional analysts have actually essentially just called the company on the door and said, look, this isn't right. This doesn't account to traditional methods of accounting and valuating a company. But Tesla is really benefiting from not only being a growth stock, but also a growth stock at a time that growth stocks are where the action is, as we talked about. I mean, there's these small few select stocks, these very highly capitalized, very liquid stocks, which Tesla is one of them, of which the valuation simply doesn't seem to matter. As Gary pointed out, Tesla sells less than 500,000 cars a year, and it is the most expensive, the most highly valued car maker of all of them. So it's really more of a technology company than a car company. That's how the market looks at it.
Yeah, no, it does. For our purposes, we'll go with that number I mentioned on an adjusted basis of $2.18 per share and say that is far better than analysts had been expecting. I mean, again, I think the consensus ended up coming in and average out at like a profit of like 3 cents, but it was all over, from anywhere from a huge loss to a huge profit. So it looks, Gary, like they did beat the street. They're talking about having sufficient liquidity to fund their products going forward. What's next on that front? You know, we all remember the brick being thrown against the window, so we have that truck still to come. I mean, what about on the innovation side in terms of moving forward, Tesla product-wise?
Look, the wild card for Tesla is always going to be the autonomous driving. If it could pull it off years before everybody else, like it claims it's going to be able to, that's a game changer. But, you know, the mystery of Tesla's valuation, I think, has been uncovered this week. J.D. Power has finally started including Tesla in its studies. Last week, a couple of weeks ago, it came in last in quality. This week, it came in #1 in appeal. That's the emotional attachment people have to these cars. People love the cars. They love the brand. They don't care if there's issues right now. They haven't for the past 10 years, and I think that's going to be the case for the next 10 years coming forward as far as the new product is